Literally just came to the chart and saw that we had a 2-hour point of interest get engaged. And if we take this as the move right here, 50% is right there and we've engaged it. Then it's just a question of draw on liquidity, which if it comes down to here, then this is the draw on liquidity right here. Draw on liquidity, and I'm covering up the candles to the right because at the time we would have been looking at this with this being the virgin wick, which would be this right there. Yep, right there. This thin gray line is this thin gray line showing the virgin wick. And so at the time, the 2-hour chat candle would have closed through this virgin wick. And the swing we can spot is here to here, 50%, which got engaged the POI, engaged the 50%. And if we use the multiple time frame CISD, everything's up. So let's name all the things we have. We have a chat candle. We have a POI. We have multiple time frame trends, all 4 being up. We have engagement of the POI. We have engagement past the 50% fib. All that's left to do is look for A+, because everything else is A+. So if everything else is A+, then something else must also be A+, and that's the entry model. Here on the 1 minute, we have this fair value gap. Fair value gap. It gets inversed nicely through here. We also had this very nice rejection wick, which actually sweeps this low right there. So upon closure, I put this green and pink box here in real time, and I watched it move. It initially went a little bit like this, and then when it got to here, I was watching them, and then it went sideways a little bit, and then it popped. So the long and short of it is that this is a A+ entry model with a nice sweep, nice wick, and inversion of the fair value gap. And on the 30-second, we had a CISD being. Okay, sorry, we have to backtrack a little bit. I don't know where we paused last time. Anyways, I was saying before I got cut off, so I have to come back and redo this part. The 1 minute had a nice sweep, has a nice wick, hammer, rejection, reversal. We have a nice fair value gap here. We nicely closed above it. And upon closure, in real time, I observed, and I put this green and pink box here, and it went a little bit like this for a few minutes, and then it was over here for a few more minutes I was watching, and then eventually it finally pops. So that's a good reversal. That's an A+ entry model. Everything else is A+, so something else must also be A+, and that's the entry model. And on the 30-second, we sweep these lows here with this rejection candle, and here's the CISD, and this is the line. And once we have this closure here, then we put a green and pink box here, and then it goes to target, and it goes much more to target. But what's notable here is that we push down, we get rejected. We sweep these lows. We have a strong close, although volume is not that great. But the candle shape is great. And I mean, something else I've been playing with is the cumulative delta. So around this time, we have sellers coming in, but very little opposition initially, but then a pushback. And then, this is something very interesting. This little green right there means a small amount of buyers came in at the ask, but there was no opposition. There was no absorption. So this is the opposite of absorption. There's like no opposition, no limit sellers in the way. So price makes a huge move. And then we right there, yeah, tiny green on the cumulative delta, meaning very few market orders come in, but making a huge move, meaning there's very few sellers in the way, unopposed. And then it goes here, and then same thing here at these green candles. Down here, tiny little green, making big moves, meaning there's no headwind, meaning there's no sellers in the way, no limit sellers. And then even more so with this big one. So I'm not saying that I could have used it. I'm just trying to interpret after the fact, trying to understand volume and cumulative delta. But here is relevant to the time of entry. A very small green and no sellers in the way. So along here, there's no sellers, no limit sellers in the way. When very few people come in with the ask, there's a large move. Eventually, the buyers just really come and push, but I'm only aiming for 1-to-1. But the cumulative delta is an interesting indicator. Basically, what a cumulative delta is the green means people come in at the ask. And if a little bit of green pushes price, actual price a lot, it means there's no limit sellers. Sellers are not opposing even a little bit of green. It's like when you go push somebody, you expect them to resist, but they just fall down. They're like a weakling. There's no opposition. You just push and they fall over. So a little bit of push just boom, shoots them, meaning there's nobody pushing on the other direction. Limit sellers. See, the red are the sellers, the green are the buyers. A little bit of green pushes a lot. So that's a very interesting interpretation of the cumulative delta. In any case, that's not Virgin Wick theory. That's just something I'm curious about and learning about. Really, it's just everything else is A+, so something else must be A+. And that's the A+ entry model. And is this an A+ entry model? Yes, because it's a fair value gap that gets inverse with a nice green candle, with a wick rejection prior, and then we just enter on the closure of this, and we can then observe cumulative delta just out of interest, seeing that even a little bit of buyers met with no resistance, met with no sellers, and just push price a lot. And then eventually the floodgates just opened, and then when the buyers came in, and still there was no sellers in the way, and it just shoots up. But I digress. But on the 30-second entry model, we have this CISD, we have this low, we make a new low, we sweep up, our opening is right there. We close over this CISD level, and what makes this CISD A plus entry model is that these candles are nice and strong. Although would have loved to see some volume there, but it chops around a little bit and then it starts to move, and then it kind of chops around here, it starts to move again, and then really boom. And I'm not greedy, I just do the 1-to-1. But yeah, this was an A plus. This was an A plus. Pretty cool. And what was cool was that I had just come in and I just saw the 2 hour. Just saw the 2 hour looking like this at the time, with the Chad, with the Virgin Wick right there, and then the retracement, which is this one right here. Yeah, you can see the thin gray line. This gray line is right there. So that's the retracement part coming down to here. The gray line, this gray line. At this candle low, it's this candle low right there. And we have a A plus. Everything else was A plus. We were just waiting for the A plus entry model, and we do get that. For me, where I'm at, this entry model is the most important thing. It's easier for me to get everything else A plus, but sometimes we don't get the nice A plus ifvg or the nice A plus CISD. And at this point, when I see those, I let them go, and I only want to hold out for A plus entry models that look like this, that has the sweep, has the strong candle closure right here, this candle, and this candle. These candles, that's what we want. And then for curiosity's sake, we can mess around with the cumulative delta. It's actually pretty intuitive to understand. Little tiny bit of ask coming in, little tiny buyers, little bit of buyer pushes price a lot, means that there's no sell limits opposing the move up. And then eventually that really just went. I mean, if cumulative delta could tell me information like this and show me that there's no sellers in the way, maybe this is a hold for a much larger risk reward. We'll have to play with that.